we started to see, prices, crossing up above the channel resistance. And you find that pattern, floating in the middle of nowhere. That's the wrong way. And short-term swing trading approach. So same thing, right? You can see that we caught for it since like beginning of the year, green arrow pointing up. And that's where you want to think about getting in on stocks like this because it looks strong.
Hi, Joey.
Hi, James. Hello.
Hi. Thanks for coming down for this podcast interview. How are you doing today?
Yeah, I'm good. Thanks for having me on this show on your YouTube channel. So glad to hopefully share a little bit more with your audience as well.
You are actually my first TA expert because previously I've all interviewed people who are more FA, focused. So you're actually the first one. Before we kickstart right into the questions, can you just maybe do a self-introduction?
Okay, sure. Thanks for having me here, James. Okay, so my name is Joey, all right, and I am currently a broker in Phillip Securities. I think since like 2013, all right, more than 10 years already. So I'm still a broker in Phillip Securities. That's where we are serving like thousands of clients as well. All right, whereby clients comes to us to they have a trading account under us, and we do provide some services as well, in terms of like sharing some of our ideas, private trainings, videos, WhatsApp, some of our daily updates as well, and that's what we share with our clients. So I'm currently a broker in Phillip Securities more than 10 years now, and I'm also a trainer as well. All right, just a couple of years back, whereby I realized that people were actually asking for me to teach and share a little bit more on my strategy, and that's where I started to come out with like a course. So we have like a boot camp. We do run some physical events in the past as well, but right now I do have this course whereby I share with some of my students and even graduates on my strategy and how we have a system to guide us as well. So yeah, still a broker, a trader, a trainer as well. All right, I've been doing this for many years. I think more than 10 years now. So very happy to hopefully share with your audience some insights as well.
Wow, thanks. Yeah, so just now you mentioned about strategies, right? So talking about, for the TA space, there are so many technical indicators and strategies out there. Can you share one that you explicitly use, and how do you interpret the signals and so forth?
Okay, good. So basically, one of my main strategy, right, would be to do with trend trading. So I, came out with this name many years back, more than like 7-8 years back, and I call this strategy one good trend. Why? Right? Because I realized that you actually really need just one good trend to really, on a specific stock, to really ride your profits, to maximize your profits, and taking steps to protect your profits along the way. So just one good trend is all you need. All right. And it can happen for a couple of stocks, it can happen for the market. But when you ride that trend, of course, you must know how to tell whether is it in an uptrend or downtrend first. I mean, the worst thing is you think it's up, actually it's down, and you keep on buying, then you're like going against the trend. So I think one good trend is really what you need. After knowing the trend, and that's how you could really maximize your profit. So I discovered this strategy, I would say, more than 10 years back, somewhere around like 2011, 2010. All right. So in case you don't know, I actually was doing an internship in Goldman Sachs, one of the investment banks, many years back. All right. And that was when I was looking at all these proprietary traders, equity sales traders, working them. And I realized that they kind of like kept things simple. All right. They're looking at trend. I mean, several different indicators here and there, but mostly it's to do with the trend. I think people want to trade together with the trend. All right. That's the key, right? In order to be successful, you need to be in the same direction as a trend. All right. And I decided to read up more on that. All right. And focus more on that. And I kind of like keep it simple. For me, I think in terms of this one good trend strategy, we focus on things like, just price action. All right. Price action. I mean, there's so many things like affecting your decision, right? Like, price action, price movement, you have candlestick, you have patterns, you have like indicators, and there's so many things, right? So to be honest, I was pretty confused when I first started. Like, if one say to buy, if this candlestick say buy, and then this indicator say sell, then like, who wins, man, right? So that was like kind of my confusion that I faced more than 10 years back. So I realized that, when you put everything together into like a step-by-step blueprint and like, kind of like sequentially in terms of like priority, then it makes much more sense. So I use what we call like the prices. Mainly, you need a price, right? Of course, you need a price for the chart. So I can take a look at any single price chart without any single indicator. And that's where I will be able to, get an opinion or deduce whether the trend is up or down just by looking at the prices. But in order to help me a little bit more, then we use what we call some indicators like the moving averages, right? Moving averages, whereby it helps you to get a little bit more of a confirmation on the trend itself, whether is it like the longer term trend or even the short term trend. All right, so that's what we do, and that's what we teach as well. All right, so we use like moving averages, and we use what we call support and resistance level. I think these are pretty critical. All right, it gives us a gauge on where prices are, what is the potential upside in terms of our stop loss, where could we potentially put it, what is the reward to risk ratio. All these comes in based on the support and resistance as well. All right, and you want to take trades like kind of like together with the trend at certain hot zones or certain areas of value that gives you a higher probability of winning. All right, so I think that is pretty much the gist of it, my strategy. All right, and how we do have like a system to guide us as well.
Well, thanks for sharing on the strategy, right? So, talking about the strategy itself, can you also maybe give an overview? Because you mentioned just now about the short term and the long term, right? Do you have like a portfolio or some stocks that you're looking at in terms of these two?
Yeah, definitely. So I think most people, right? So I'm a broker in Phillip Securities for more than 10 years now. And to be honest, we work with like thousands of clients, me and my team, all right? And I realized that most people tend to mix it up. All right, they tend to. I mean, most people like like quick profits, right? They buy short term and hopefully make money quickly. Right? Nobody want to make money like wait 10 years to make some money. They want to make money like in 5 days or 10 days or 1 day, right? So most people tend to treat the stock market with a short term kind of mentality, of course, unless you have done your proper fundamental research or are like a fundamental investor. That's different.
And if you have enjoyed this video thus far, I will greatly appreciate it if you can help me to smash that like button, subscribe to my channel, and ring the bell so you get notified every time I release another stock analysis video.
Most people, when they read up a little bit online, they thought it's pretty simple: buy low, sell high, and then they buy a stock, right? And thinking that they want to make some quick money, right? And sometimes it's good, right? Sometimes they make a couple of $100, they sell, and then very happy. But most of the time, I realize that people, when they make a little bit of a losses, right? So they get into kind of like a short-term mentality, and when they make a little bit of losses, they will have what we call these emotions of like hope, right, coming in, and they want to just hold on. They don't want to like acknowledge the loss and then get out or what, and they might not even know that the stock is going lower or maybe in a downtrend or what. So they just hold on to it, right? And from this stock that they're holding, whereby they wanted to trade short term, they hold on to it and it goes down, and they do nothing about it. They think about it, they wait about it, and that's what we hear almost every single day, right? We see how we see what it says next week, and they just hold on to it blindly. And before you know it, after 1 month, 2 months, 5 months, 1 year, 2 years, it just goes down, 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 and unknowingly they actually became a long-term kind of investor, all right? And then when I look at the portfolio, hey, why do you hold on to this stock? They say, oh no, it's for long term. But I look at it, it's not even meant to be long term in the first place. I mean, you kind of like bought it because it's short term, and then you lost a little bit of money, and then you became long term because you have no choice, right? So that is what most people actually does. I mean, based on us working with thousands of clients. So I believe that in terms of the portfolio wise, you need to be very clear. So we have like kind of like a longer term portfolio, and I do share like more than 30 over stocks in this service called the Monthly Edge. We have this service called the Monthly Edge. It's a premium service whereby people, I mean, some of my subscribers are actually getting every 2 new US stocks every month, and we have this secret membership whereby we share these stocks. So in the longer term portfolio, we look at a little bit more on the US market, and we have like stocks like Microsoft, Meta Platform, Amazon, and in fact we have nvidia, some of the AI plays as well. They've gone up by more than 50-80% as well over the past 1 over year. Right, so this is what we have in our longer term kind of like portfolio, like more to buy and to hold. I mean, not saying that you cannot trade it, you can, but the mindset is that when we get in, we are looking to actually go for the long haul, at least 2 years, 3 years, 5 years kind of outlook. Thinking to add in more again, we get out when we see some profit taking at a certain resistance, but always looking to get back in again. That's more for the longer term, right? And for the short term, we do focus on like some short-term trading as well on like CFD in terms of like swing trading as well, and we do that on Singapore stocks as well. So maybe if you want, I can share my screen. Let me just go to share my screen right now. Like for example, you can see this is nvidia, right? So nvidia has been in our watched this and we have called for it since like last year, when it was pretty much in an uptrend already. Like, so I mean, in a nutshell, like just to share with you how do people actually tell a trend? Well, very simple. We can actually draw what we call like a trend line, like this downward sloping. You can see channel resistance line right over here. So it was a bit of a downtrend since 2022 for nvidia, due to rate hikes and inflation. But somewhere around like the beginning of last year, somewhere around like January, February, right over here, we started to see prices crossing up above the channel resistance line. So that is what we call a sign of a trend reversal from like a downtrend to an uptrend, right? And that's where you want to start looking at stocks like this to position yourselves to get in. So that's just by looking at the prices itself, right? But as I mentioned, we do use like the moving averages as well to get another confirmation of a trend reversal. So how we do it is that we can look at look at this, right? This is what we call the crossover between the 100 days moving average and the 200 days moving average. So you can see that it has pretty much turned into an uptrend just with the crossover from red to the blue line, and we have turned into uptrend. And that's where you want to start, really thinking about getting in and loading up on stocks like this to maximize your profit. So nvidia is one of those stocks that we have been calling for it since last year. We're still holding on to it, and looks pretty good. I mean, yes, push out. Of course, we saw a bit of weakness in the short term, but essentially these are some of the stocks that we are looking at as well. And maybe like in the Singapore market as well, stocks like Samudera Shipping. So this is more, not really like a longer term play. I mean, we can't compare, like this stock, Samudera Shipping, with like nvidia, right, which is a totally different kind of play, right? So this one is more of like Singapore play. For us, it's more of a short-term swing trading approach. So same thing, right? You can see that we caught for it since like beginning of the year when it turned, kind of like from a downtrend. It was downtrend since last year. And look at this right here. We broke above it. We started to consolidate a little bit higher. And that is where we are seeing signs of a reversal as well. So not just in terms of a break above a resistance, but when you see a consolidation that is higher, that can mean that buyers are out, and there could be a potential reversal. So you can see that we've kind of like pushed higher, and I kind of like shared this with my clients as well over the past couple of weeks, and now we are at 0.905. So this is one of our stocks that's more of a kind of a short-term play that is still in our watch list. We just focus on the charts itself, right? We believe that the charts don't lie, and the charts don't lie, and based on the charts, we are able to tell something. We are able to tell, I mean, in terms of like building a plan on what potentially to do in terms of to get in or to get out. So we focus a little bit more on that, plus risk management, plus the psychological aspect as well. So most people tend to want to buy low and sell high, and because of that, they want to buy cheap, they want to buy low, right? So when they go down, they buy, and if they buy in a downtrend, so that can be really dangerous in terms of the psychological aspect. So I think in terms of like investor sentiment, all right, yeah, I mean, of course, we look at certain things like the VIX, right, the volatility index, whereby the fear indicator and all that. But I mean, all this can come in and give you a guide on the bullishness of the market, all right? But ultimately, I still feel that you want to have like a proven strategy that works for you, all right, and you don't want to focus on too many things, right? Because like, let's say there's a fear index that comes out and then say that you want to be fearful, but when you look at a particular stocks, all signs are pointing up, there could be more upside, and it works for you, then I still think to go ahead. So keep it simple. I think to keep it simple, so not let too many things affect your decision, because then that will be what we call analysis paralysis. And most often when that happens, you will probably make the wrong decisions or maybe even do nothing.
Okay, cool. Thanks. So maybe the next question that I get quite often is, what do you do when during instances like, maybe all the TA signals are pointing upwards, but there's sort of like maybe ongoing news or that fundamentals are maybe deteriorating. So what do you do during such a case?
Oh, that's a very good question. So we have many students, and even mentees that ask us as well, like, hey, Joey, I mean, do you just look at TA? Do you focus on FA? Well, I would say that my forte is mainly on TA, like technical analysis, on looking at the charts and then determine entry and exit. But it doesn't mean that FA is not important. So FA is important as well. As I said, we do have this like premium service called the Monthly Edge, whereby we share more than 30 over US stocks. We actually dive into the fundamentals of the stocks, the growth reasons, and why we like them, right? Those are the revenue, the income statement, the balance sheet, the intrinsic value, and all that. So I think it's very important. So especially if you're going on, to trade stocks that are kind of like for the long haul, you want to hold them for like 2, 3, 5 years, then yeah, you definitely want to do some serious FA work. And we do use certain tools as well to guide us. We don't want to read through like 60 pages of report every single day, but we use certain tools to help us, right? Like, there's this tool that we use called Jitta, Jitta. I think you probably heard of it, jitta.com.
Oh,
All right.
yeah,
That
yeah, heard of it
gives you
before.
a pretty good and impressive tool that gives you a quick perspective on the FA, on a fundamental perspective of a stock in a couple of minutes. So we do use certain tools like that. But I feel that when you use FA, right, and TA, all right, we want to preferably get in on the stock when not just the FA is good, but also the TA is good. All right, that means both of them is good. I think it's harder to get wrong if like FA is good, wow, growth reason is there, undervalued, blah blah blah, and then TA looks pretty good as well. We have some bullish signals coming out. It's a pretty strong uptrend. Everything's pointing up. It's harder to be wrong, right? If both FA and TA is good. So we want to focus on both in that sense, even though my forte is in TA, but I think it's good to focus on both. And back to your question, because you mentioned that, sometimes there might be certain stocks that, the FA sounds very good. Wow, to be honest, we as a broker, we do look through lots of research reports, research papers and all that. And sometimes when I look at a research report, written by a research analyst, right? And fundamentally, it sounds very good. The way they explain it in terms of the growth reasons and all that, the prospect, and it looks good. But when I look at the chart, I was like, oh my God, the chart can be terrible. It can just be going down for the past like 1-2 years, and it is a very clear downtrend. So I think it's good to be cautious as well, because we want to take it with a pinch of salt as well in terms of those fundamental research papers, because it is written very well. And when I look at the chart and it's just like going down and down, it's a downtrend. There are no clear signs of it moving up. It may move out next 1 or 2 more years. Then even no matter how good it is in the FA, I would probably still want to be careful. That doesn't make sense, right? So only when I clear, when I see like signs of a reversal or some pretty good strength coming back, okay, fine. Then maybe we might want to look at it. So we don't want just depend on the FA report and then they just put one fixed target price. I don't know where they get it, but there's one target price, and many of my clients actually believe it, and they say, I saw the target price is now it's like maybe 50 cents. I saw target price $1.20, right? And they just hold on to it, hoping that will just play out eventually. So we don't want that. I think it's good to combine both, right? And preferably both FA and TA are looking good for the stock. Great, that would be better.
Yeah, the best of both worlds.
Yeah, definitely. Yeah.
Yeah. Okay, so then moving on to the next question, right? So let's say, FA is good, TA is good, but if let's say things turn south, like for example, the stock price starts to come down and things like that, do you look at how to manage this kind of risk in terms of like maybe risk reward ratio or stop loss? Can you share some of these risk management strategies that you have?
Definitely. So I think that in the stock market, all right, I think it's very important, all right, especially if you are trading for the short term, right? Of course, in the longer term, I think you want to have a diversified portfolio as well to manage your risk, all right? You want to make sure you have like 20, 30 stocks. Depending on your funds that you have, but have a diversified portfolio, all right? And you want to have like kind of like a mental stop loss as well for a longer term portfolio. You can give it a little bit more allowance because you're looking at like 3 years, 5 years kind of time frame. But I think it's good to note also that doesn't mean long term means you just buy it there and then you leave it there and you don't bother about it, and then like 5 years later you log in and check, right? I think you still want to monitor your stock portfolio, and if there are any signs of weakness or maybe the trend starting to turn down or it breaks certain key support level that it has been holding on, that's where you might want to reduce some exposure, all right, or maybe stop loss as well. Or maybe if you have already made profits, it's good to also take steps to protect your profits, right? That's for the longer term, kind of like a portfolio. But for the short term, I think it's good that even more so that you really should focus on risk management. So I think we do what we call like position sizing, and that's what we teach our students and mentees as well. That means when you were to lose, you want to lose a specific amount of money. So how do you do that? Well, you can actually calculate the number of shares to buy based on this position sizing method of risk management, so that whether it goes up, it goes down. Of course, you want it to go up, like if you buy, but if it goes down, you hit your stop loss, you get out, you lose a specific amount of money, not more, not less. All right. Why? Because that's how you keep your losses small. So I think most people, they tend to only want to think about winning. I mean, most people buy stocks to make money. Nobody buy to lose money, right? So you want to buy to win, to make more money, to hopefully go up, and then you can 10%, 20%, 100%, right? Very happy, right? But I think that is, you hopefully it does that, right? And you can't really control whether you go up next week or next month, right? So you can't really control that. But what you could control is the downside. That means if it were to break a certain level, you have a stop loss to get out. You actually manage the downside. So I think I share this with many of my students and mentees as well, right? That means take care of the downside, right? Take care of the downside. Let the upside take care of itself. I think that's very crucial, because you if you don't take care of the downside and then you just buy and then you didn't get out, it starts turning into a downtrend and you're just holding on to it, your losses can really balloon and you can wipe out a huge chunk of a capital that is so much harder to come back up. All right. So I think risk management is very important. And then we do look at things like reward to risk ratio as well. That means for let's say a particular trade, maybe if you want, I can share my screen as well. Maybe to just share with you some of the trades whereby pretty good reward to risk ratio. Okay, so let me maybe share with you like some of the stocks that we have caught for as well. That whereby maybe I can share with you a plan that we had. Like for example, we have like Broadcom. So we talk about nvidia. So Broadcom is actually one of the stocks that we like as well. All right, pretty strong uptrend since last year. We caught for it. So for example, right now for Broadcom, in fact, just a couple of weeks back, we caught for it. You can see very firm uptrend just by looking at the prices. We are forming what we call higher lows, right? Higher lows. So it gets higher and higher. Support is getting higher. That's a sign of an uptrend on top of the moving average. You can see the 100 days moving average is above the 200 days moving average. So pretty strong uptrending stock that we are thinking to get in on dips, right? But on dips doesn't mean like it falls all the way down and you get in, right? You only want to get in on dips whereby if the support is still holding, that's where you could get in at a slightly lower prices for a quick rebound. So for example, we can draw what we call like a horizontal support level right over here. So this is what we call like a support level. You can see for like Broadcom, it would be about 1,200, right? You can rebounded from it like about 2-3 months. Look at this, right? Rebounded. We saw a couple of a bullish candlestick. That's where candlestick comes in as well, right? So most people tend to like complicate things and they search for a particular bullish candle. I mean, you can just go and Google bullish candlestick, and there's so many, like 20-30 patterns.
So many,
exactly, and you go and find that pattern, floating in the middle of nowhere. That's the wrong way, right? So you only want to use it in the right way when you have look at certain things like the trend, certain hot zones, and when candlestick comes in, I think that would give it more confirmation, right? So I think
like priority.
Yeah, correct. In terms of the priority of doing things, because if you do it the wrong way, sometimes it's actually a sell, but you think it's a buy, and then you go and buy, all right? So like for this, like Broadcom, you can see that we have this kind of like a consolidation, all right? So in terms of a plan that one can build, like, okay, now it's gone up already, right? It's kind of like headed towards this resistance at 1,004, you can see, right? So that is where potentially you can take some profits. Now it's 1,380. So anywhere near 1,004, like 1,390, 1,380 something, you can lock in some profits. But if it does dip down again, like for example, we had this plan previously over here, like look at this. So this could be a plan right over here, whereby you time your entry to get in near a support level when you spot some bullish reversal candles, and to get out if in the short term, right? For example, let's say if we were to break down this 1,200 support, you want to have a plan to get out. I mean, for a short term kind of trade, because it can actually hit lower. All right, so this could be kind of like a trade plan. You can see right over here, upside to downside. When you put my mouse over here, you can see that would be about 4.33 times reward to risk ratio. That means potentially you might be risking $100, but you could make $400, like what is happening right now, right? So that's a pretty good reward to risk ratio. You want to have a reward to risk ratio of at least more than 2 times, right? Or 3 or 4 or 5 or more than 10 times, even better, right? The more the better, but you don't want to like make a little bit only. When you make and then you lose a lot, right? So I think that is how you can focus on trades which are gives you a higher probability of winning, right? Pick trades that gives you a high reward to risk ratio.
Wow, this is pretty cool. Especially the part whereby you can straight away look at the potential profit versus the losses.
Correct, correct.
Yeah,
So that's
okay.
pretty much how we do it. I mean, in terms of technical, all right, we it's a little more straightforward, all right. You based on the prices, based on certain indicators, it's a kind of like more direct way to gauge a plan. And of course, the plan must make sense first, before you execute on it. If it doesn't make sense, then go on to another trade, wait for it, be patient, don't have to rush, all right. You don't have to force yourself to buy something when clearly there's nothing to buy, lah.
That's cool. That's cool. Okay. So I understand that when it comes to TA, it can be easily misunderstood by a lot of people. So do you have any misconceptions about TA that you think is worth to debunk?
I would say that, I mean, after speaking to many of my students, mentees, and even my broking clients as well, I think most people have the mindset or kind of like the misconception that TA is very hard. All right, I mean, to be honest, it's quite hard as well. I mean, when more than 10 years back when I started it, looking at it and I look at all the charts and there's so many lines over, and it's like indicators all over and the whole chart is like messed up. To be honest, it gets a bit complicated, it gets a bit scary, and but I feel that there is a way to look at it such that it is kept simple. I think most people tend to, as I say, over complicate things. All right, they want to have a lot of things in their chart, and they believe that because you have so many things, and then if you get so much more confirmation. But the truth is that if you have so many things and you don't really understand how they all work together, like the candlestick or this pattern here and there, or this particular price action, and it can complicate things. It can make you confused, and when it does that, you will probably make wrong decisions. So I think it's good to keep it simple, to find a strategy that is suitable for you. Like for me, as I say, we have this strategy called the one good trend, whereby we focus on taking trades along with the trend at high probability zones. All right, and we want to think about protecting our profits as we as the stock moves up. All right, you can take some profit and get out while protecting profits. I think that is a strategy that worked for me. It's worked for many of my students as well. So I think find a strategy that suits you. All right, you don't have to get too scared or too afraid, because I think it can be kept simple if you know what to look at. All right, if you know how to do it step by step as well. I think that is where you get much more clarity.
Okay, thanks for sharing on that.
Yeah.
Moving on to the next question. Yeah, do you have like tools or software that you find most useful or helpful, right, for your TA and can recommend to the readers out here?
Tools and software. So we use quite a few tools, but one of the tools that I use is this system that I developed. I think more than 6-7 years back. We have this system called the One GT. One GT stands for One Good Trend. So basically, on my strategy, the One Good Trend, I have. I mean, that's the whole entire framework behind. But I've developed a system. All right. I mean, give some very specific criteria to my developer. Back tested it. Tweak it, refine it along the way over the past couple of years. And we have this system that guides us on like entry and exit. So like for certain stocks like Microsoft, or I mean some of the stocks that I mentioned just now, nvidia, we actually had a couple of like bullish signals as well coming in. So it alerts us to stocks like this and also guides us on entry and exit. So this system is what I call the One GT system. So I think maybe for people who want to find out more, they can attend one of our free webinars whereby I share a little bit more on the strategy, and then maybe we'll look at the system as well to see what it says, and on some of the stocks that they are looking at as well.
Hey Joey, so just now you mentioned about the one good trend. Is it possible that you give us a sneak peek of this system, of how it works and things like that?
Yeah, sure, no problem. Maybe I can just share my screen. Just hang in a second, huh? Okay, good. So here is my screen. So this is what we call like the One GT system now. So as I mentioned, you can attend one of those free webinars to learn a bit more, all right, in terms of your audience. And what happens is that this system is based on the One Good Trend framework, which I kind of like shared a little bit just now. And look at this right over here. So this stock is Yangzijiang YZJ Shipbuilding, one of the Singapore stocks that we covered since last year. Not too bad. And you can see that when we kind of like turn it on, there's a switch right over here. You can click on it, and all these signals comes out, all right, whereby it all has all been back tested and refined along the way. So when you see like a kind of like a bullish, look at this, right? So for Yangzijiang, maybe in 2023, we got a couple of bullish signal, this green arrow pointing up. And that's where you want to think about getting in on stocks like this, because it looks strong. The trend looks up. I mean, it's green in color as well. You can see it started push up. And the thing is that most people also, when the stock moves up, right, they also don't really know when to get out, right? They think that it might go higher. So they just hold on to it. And before you know it, they might come back down, and it's like back to square one, or they maybe even lose some money, right? So I think what can be done is that with this system, we have it's not just bullish all the way. When we have like a bearish signal, like for example, this is like a red arrow. We have broken some support level. Look at this, right? A bearish signal came out and started to hit all the way down. So this can guide you to also think about getting out, especially if you see some bearish signals appearing after the stock has pushed up by quite a fair bit, right? And then new bullish one coming in as well in December, January this year. Look at this, went all the way up. Got to exit, another bullish signal, went all the way up again. And in fact, a couple of days back, we got a bullish signal coming up. So this just came to my watch this again. I think, we might start to see a bit more, bullishness coming in, especially if we break maybe the 180 level. We could see the reversal happening again, maybe all the way to like 190 to $2, right? So that's how kind of like a system can guide you, all right? Not just on alerting you to a stock, but also on when to get in and maybe when to get out as well.
Cool. Thanks for sharing on this too. It's called One Good Trend.
Yeah.
So how do people actually, come to this One Good Trend? I mean, what link can they click on or things like that?
All right, no problem. I'll just share with you the link later. But essentially, can attend one of my free webinars. All right, that's where we share a little bit more on like the strategy behind the system, and then I'll share with you on the system as well. Maybe how we do have like a program if you're keen to learn more on the entire strategy, and then also to have access to the system, you can check it out. All right, that's where we have this program for those who want to learn a little bit more.
Okay, cool. So I will include the link down below in my description box.
Yeah.
All right. So moving on. The last two questions that I have. So I believe a lot of us make mistakes along the way. Can you share one biggest mistake that you have and most memorable to you? Yeah.
The most memorable to me. Okay, let me see. I think when I first started, I make many mistakes lah. Many mistakes. I mean, I tend to, I didn't know what I was doing, and then I say, right, most people tend to just hold on to losing stocks. So I was one of them. Right, I first started, I think, as an undergrad in about 2007, or 2007, more than 15 over years back, right? And I read up a little bit online, and I held on to this stock called Guacoland, if I'm not wrong, right? So I read a little bit of research report, and I was then, I think I was doing my internship in Goldman Sachs as well. So I read up a little bit online. I thought, like, what, not too bad, right? And maybe there's some research report saying buy or something. And I read this report, and I bought the stock, and I held it for like, I think the global financial crisis came, Lehman Brothers collapse or whatever then, right? And it was like terrible. And the stock came down like more than 30-40%. And I lose like $30,000. So that was very painful. I mean, compared to now, I think it's a very good lesson, because that was what kind of like woke me up. And then, I started the entire journey, because I knew that I cannot do silly mistakes like this. I need to learn it properly. I need to do it properly, start from scratch. And that was kind of like a little bit of my turning point in terms of really mastering a proper strategy. Of course, then I developed and I, chance upon this trend, and I, developed this One Good Trend strategy. But that was kind of like a turning point whereby, after losing that amount of money, $20,000 over $30,000 as an undergrad, all your hard-earned savings, all your ampao money you saved over the past 20 over years, all gone. Very painful lah. So I think from that on, I think it really woke me up, and things started to get better when I dive deeper into like a strategy that worked for me.
Yeah, actually, really very painful. I mean, for someone who's just starting out and you lose 20 to 30,000, right?
Exactly.
Yeah. Okay. Last question that I have for someone new to TA, right? So, do you have any advice for someone new to TA?
I would say for TA, I think if you are new, I mean, let's say if I'm a newbie, like many years back, I would think that, of course, you can go on to like YouTube and watch, videos and stuff. But I think that, sometimes YouTube or there's just so many things, right? There's so many videos, and many times it can get a little bit confusing. So I think if I would have started out like all over again and zero knowledge, I think it's good to find a strategy, or maybe it's just someone that you can follow, someone you can learn from. And of course, it must make sense to you. The strategy must make sense. You find that you can do it as well, and I think that would really shortcut your learning curve. So find somebody. I mean, it could be me, it could be anybody else, but somebody who you find that you can resonate with the strategy. It makes sense to you, and learn from the person. I think if that's the case, then you will shorten your learning curve, and you'll get results much faster than just scrolling through YouTube. And this is what I did as well, right? More than 10 years ago, right? I think, just scroll through YouTube, and then after a while, it gets a bit confusing, right? One buy, one sell, again, so many indicators coming out, again, so many people saying different things, right? But find something that works for yourself, stick to it, test it, work on it. Don't change strategy every other day, all right? Just on that one, be good at it, and then I think eventually you'll see results.
Okay. Thanks a lot, Joey. for this all the sharing that you have done so far. Okay, so with that, right, we have come to the end of the webinar. So if you are interested, you can check out Joey Choy YouTube as well. Yeah. Okay.
Thank you. Thank you so much,
Any
James. Thanks for
yeah.
having me here. Yeah.
Thanks. Thanks, Joey. Okay.
Thank
I'll see you
you.
next time. Thank
Yep.
you. Bye bye.
See you.
Before we end off, if you find the video helpful, I will appreciate it if you can help me to tap the like button and share the video so more people get to know about this video. Next up, don't forget to check out this video over here if you have another few minutes to spare. And I will see you next time. Thanks for watching and ciao.